Adam, you was not on voice. Okay. So the idea is always looking at our underlying pivots and seeing how they're reacting and where they are, right? But the on ES itself, the concept is more like you've got three uh areas that we're watching. We're looking at a initial bid, we're looking at a failure to break, and then we're looking at a stop run from the initial bid, and then we're looking for a rebid of the area. And that usually looks like this, right? Does that make sense? So you have an initial bid that pushes price up, a failure to break, and then you have a stop run of these lows. And so you have a lower low that's created. And then the idea is that we push back up to at least here, right, for a rebid. And once that's initialized, so this area, the previous bid, we look for a rebid to occur for another run back up. So you've basically fucked both sides, right? You've stopped out the buyers here, and you've stopped out the sellers here. So like when we're looking at our underlyings with that, we see that they're at their pivots. So we can be like, okay, well, if this is what's happening and our underlyings are at a pivot, we'll see some sort of passive buying at these levels, and we can expect a move at least to our previous range. Once that breaks, we have the a potential rebid of this area for a continuation back up, punishing the sellers at the lows. Are you following me, Adam? Okay. And you'll see this pattern happen a lot where we get a bounce, a push, failure to break, and then a lower low, and then a continuation up. And that's just to punish the people who bought here, punish the people who tried to sell here, and then a push back up and your rebid here for continuation, right? And if it like matches up with what our indicators are telling us and what our underlyings are doing, so if they're at our major pivots, then it's something that's worthwhile playing. Because if we don't see that initiation here, we know we need to stop out and that we're just going to be looking for that new low. It's the same reason why you'd be willing to buy this area, right? Because if we actually just go to a higher time frame here and look at this area, this buy was worth taking because it's just a double bottom, right? So it's like the bottom of our distribution. So if we're going to buy and we think that we're in a balanced day where we're just doing this, right? Like this is our low. And so we're going to try to take this on our first attempt, which is what we did for our initial play. So you're watching the indicators and not exiting too early on a valid trade. Just watching how price is reacting in areas. And I again, like when I posted earlier, we saw that VIXI had rejected ADR at 9.55. We saw that Apple was at ADR low, and we saw buying coming in at those levels. Uh, and we had a nice little tick move with it, and we had a target in mind from our stacked indicator. So it's like if those are catching a bid, our underlyings are catching a bid, and we have a pivot being developed at the lows on stacked, it's like that's probably a good area for a bounce, right? That's an area where I'm willing to attempt. And so it's like, oh, 42s didn't get hit exactly. Well, they did, but the fill was like there wasn't a lot of liquidity on 42s, right? They got bought, and so there's a high potential for you to not get filled there. So you just pyramid in, right? You take an initial position, and then if it works, you add into it. Like my last runner was 34s on NQ, but like we pushed down to 22 on NQ, right? So like I bought in that area at the lows and then averaged in, waiting to see market participation, the push and the aggressive move back up. My dog just opened my door. Let out all of my heat. Oh, the actual worst. What do you want? I mean, it didn't have to be stop punting, but that's how it played out, right? It could have been a continuation of a sell-off, but we did see the acceleration outside of the area, right? So we just hit it and we immediately pushed back up with minimal selling pressure on the other side. And so, yeah, I mean, it can be considered that stop run because stops are going to get punished there, right? Our shorts are going to get punished there. And then we have a forced market buying from people getting stopped out. Does that help, Adam? I don't know. Yeah, I mean it's just like applying what we know, right? And then taking what we know and adding probabilities to it of like what's most likely to happen here, and does it meet my risk to reward criteria? Is it worth trying to take a position here with understanding that you're going to get passive buying at our underlying pivots, and that if if that passive buying does happen on our underlyings, the people who are trying to short the lows are going to be punished, and we can then do a rerun, like a run back up. And it's the same reason why I
So seeing reports that the Fed, Treasury, and others are to meet on a
we flag,
central bank digital currency, so no
and
data
we are able to
on
hold this node that we're creating here, or this is strong selling, and we can push back down. But you have the lowest risk shorting these highs at our known area of resistance. And even if it's choppy, like it's better to take this short than trying to short down here, right? Like, I don't know. And we see that NQ rejected VWAP. We've seen that NQ's been rejecting VWAP all day. So, like, until that invalidates, we know that there's a seller there. Okay, I need to door closed enough. 66. Yeah, you really want to see it under 62, but yeah, 66 would be like my first area of like this is where we need to really see buying participation step in. But you've got your RTH like 30-second opening range here, so I'd expect choppiness, and then you either get a continuation down or whatever it may be. But yeah, your first like pivot is this. Yeah, I mean, and that's fine. Again, like I sold my first contracts into this 50-52 area, and I was fine with that because like we don't know if this is gonna go right. But I expected choppiness here, and so I want to make sure that I get at least the high if the sellers do step back in this area, you know? And then our next area was just the top of this previous range, right? So if we sold the bottom of this previous range, I'm going to be looking to sell the highs of this range as well. So that's that 5860 area where then we tried to build, right? And then after that, okay, well, I'm going to be selling into these highs because this is a clear seller here. So, like, I'm taking some off in this area. And now you just leave your stop and either we hold this and we're in from the absolute lows, or, it invalidates, and then we can look to either play short or look for a bounce and rebuy, re-add into this previous range that we've already played. You know what I mean? I'm just looking left. That's why it's like leave at a break even. And even like this first trade, I sold half into here and then I left at break even from the lows, right? So even on this pushback down, we didn't hit our stop. It doesn't invalidate until then. So you can either add in from the lows and understanding that you still are keeping your same stop here, because if we break this, we're going lower, right? Which is what happened here. But like you can add on these lows and keep your initial stop and then go for the push, the continuation. You just have to like trust the play a little bit more. It might help to start using these long short position. You can manipulate these and then kind of plan out your trades a little bit better of what you're looking for. That might help you from like a psychological standpoint. That's kind of what we were trying to do with the stacked indicator with like naming the targets, where it's like we have our lows and what we're looking for is continuation up from a bounce, right? So what happens when we break over this orange cloud? Well, the downtrend is now broken, right? And we have our blue little invalidation line where we want price to be able to hold. That forms after we break over our orange cloud. So we're looking for price to be able to hold here for a continuation up. And that forms only on a break of our orange cloud either side. A line will build. You can see it here as well, where we break under our orange cloud and we're looking for price to either come back up or validate and hold this level. And you can see it hold that level as resistance for that continuation down. Right? So like we've tried to build in some like emotional checks for you in a trade. It's like, oh, this is what's happening. I can stay in this position because we're holding our level here, and now we formed an uptrend. and we now have targets being developed for us, of where we can take risk off. I was just saying, like, we've created in the stacked indicator itself, we've created like emotional checks for you to know that you can stay in from your lows, right? So like you can risk off into targets, but like from the break of the orange line, we get these little areas developed. This blue line here, this red line here, which validates the trend reversal, right? So like once we break over the orange, we look for price to be able to hold over this blue line, which is what it does for that push back up, and then we can play the orange band, that's orange cloud that's been created. Just as on this downside, this red line was created, we're looking for price once it gets below to hold that as resistance for continuation, and then we play it into our targets, and you can risk off into targets. Damer's question. Damer asked a question. Oh. Yeah, so like we've got our RTH 30-second open range here, so it's just the first 30 seconds of the regular trading hours, right? So we're just looking to see, this should be a sentiment check, right? So 66 is the high of that opening range, and you can see that we have a buyer here. So if we come back into this, you kind of expect the bounce. But if we break below that, right, just you treat it like an opening range. Either we bounce the high of it, or we chop into it, and we're looking for the 62, which is the low of that, to become resistance for that continuation down, right? It's just opening range logic. So it's like, yeah, that's kind of our, like, where we're looking to see if there's any strength is 66, 65. But really 62s validate continuation or not, because that's like the last ditch effort for bulls to show that they have any sort of real strength, or we come back down to this previous range. Right? Like, would you take a short at opening range high, or would you take a short on the rejection of opening range low? What are your odds there on those two plays? And like this 11960 level is kind of my make new low a day kind of validation, right? Because like if we can't hold where we found buyers last time after the shorts got squeezed up, it's like, okay, well, this is where actual buying took place in this area. So if they're unwilling to hold this again, I'll be looking for a new low a day. Yeah. And it's just like NQV WAP. But yeah, it is rough. Uh, I know that you can export an indicator's values to like a CSV for Excel. Um, but I don't know if it would plot what you wanted. But I know that TradingView did add that in recently that you can export indicators values. Don't ask me how to do that. You're gonna have to Google that one. Yeah, I mean, I don't know what you would say even to train it to do it, unless you could import, but I don't know. You see, like we hit those 66s and immediately push back up aggressively. It's like you don't want to be short there. There's really not much to say. We caught all the good trades this morning. Uh, we're just kind of battling, trying to eat up the sellers that are here, and the sellers are trying to punish all of the people who bought in late, right? So it's just going to be this battleground as we flag. Um, so like nice little short scalps into our 70, 75 areas, and then you play down to the bottom of the range, right? That's the only trade right now. If you're not just in runners from long, until we can confirm under and push, we just wait. This is a fairly unused element of tick light, but this bottom piece is looking at all of the different ticks. So like the NQ tick, the RTY tick, right? Like the NYSE tick, and it's taking all of them and showing you divergences between them. So like when it's green, that means that all three are in an uptrend, right? They're all doing an uptick. If it's red, that means that all three are downtick. If it's gray, that means that there's divergence between the ticks. So in this chop, we're seeing that divergence, right? Slightly bearish, but divergence here. So you don't really have confirmed trend until these ticks are all aligned and pushing for real, continuation. Yeah, it's a B distribution. I mean, we're definitely building out. Uh, the day started to look like this, right? And now it's starting to be more like this. We had a pretty equal distribution this morning, but we're definitely building out this lower node where we're doing balance in between this lower distribution. So until we can break and hold that, we there's really not much to do. Either you're like shorting the top of this balance area, or you're targeting this next distribution, and we can see that on our profiles here as well, where like we started the day and it was more like this, right? One and then two, and now we're really building out this like D in this lower distribution with 72, 75 being our value high, and 50s, 55s, like 53s being our value low, and just chopping around in here. So like you're either playing these edges or you're waiting for this to become support for a push up into our 85, 90. It seems like you guys are understanding the profiles a little bit more lately, so that's good. Glad that they're starting to click. Yeah, I'm really liking it, Flex. You just as long as you got you're only taking those shorts at like known pivots, right? Like our larger time frame pivots, then it pretty much works. And then you're just hedging your runners. It gets messy when you try to like short in the middle of the range. Something else that's probably let me merge these profiles together. Merge left, merge left. So like if we merge those four profiles that I just showed, we get this, right? So you have a much more pronounced double distribution here. And I'll post that in chat as well. But that should give a clearer picture of how we're like building this out over a couple periods. And so like if this is going to just become, a D, we're going to be chopping in this range. That range being, 65 to 85, 85, 90. Yeah, exactly. Great job, Jason. Yeah, that's perfect with the Apple trade. It's like it's still following the plan. Might just take a bit longer, but definitely worth. Right now, I'm basically just in my last runner from the lows from the 42 area, and I'm just been shorting into every breach of our 72s, and just playing it back down with micros, just building until we can like invalidate that sell. Just scalping this with shorts. Just very small position, just taking on like 5 MNQ. That's the plan, Jason. I still don't get how you do it from a truck, but kudos to you, you know? Gaston coming in here with some bait. I see. Yeah, like if you're on your phone, I would be playing the major levels that I'm calling instead of trying to play the chop. Google, Tesla are really the only things that have any sort of potential for range breaks here. Microsoft pretty stuck on VWAP. Apple's just trying to retest VWAP as support. Google is at ADR high, trying to hold that as support for a break. Same with Tesla, both are at ADR, trying to break. So that's good. Again, like where we are, it's just who runs out of ammo first between these two pivots. Does the Sotler have infinite ammo? Do the buyers have the patience to keep up, right? But we should get a strong directional move when one of them kind of runs out, and then if they step back in, we'll know. If they step back in, we'll know. But like that'll be kind of the key once one of these sides run out and we see like a new test, either of a new low or a new high, and then after that we can decide on direction. I'm gonna mute while I eat this apple. I like this upside target that was created on Stacked. It has nice confluence with our London Open opening range. It's nice to see. So if we do pop, I would expect us to be there. Again, we're just watching these 62s to see the move from there, if it's going to happen, but just in my short from 72s, and that's it. I don't have much on. We're either expecting this to bounce as our opening range holding, or right, we reject and then we go to our targets that are being created for us. My DOM is not updating. Not cool. Oh, there we go. Like the ticks were updating, but the numbers aren't moving. All right, I'm taking off some into 62s here. Just have half size now. So it took off 10. Just two lotting them. Mm, not yet. I don't think. Do you? I mean, I don't know. I don't really see CMF's still white line. Broke under our zero and are making new lows. I'd expect a buyer to step in here if anywhere. This is also NQ CMF, so FEG filled below us now at the 62. As soon as I get on voice, I always forget to use T2G. Okay. Yeah, I can see it. On yours, yeah. Just sort of looking for the zero breach for confirmation, I guess. It's like a tick divergence, right? With a without a secondary base above zero. Alright. Yeah, great job, Chrome. So back to what we were looking at before. This is our test, right? That dip below, and we'll see if we get a retest of our 62s and reject. We'll be looking for the target, and we'll see what happens in this imbalance that's here. I don't know why I try to draw when I have boxes. This is Vixie VWAP test. See if we can get back over, and this is going to be our retest of our 62 area. See if sellers knock the spire out. Trying to keep up with marking trades as we take them, just for or like the areas that we're looking at to short or so like buy, just so at end of day I can easily post it and not have to really worry about it. If you want like a good, I don't want to say good, but what we're looking at here is if you just take from the last cell to this one, and we need to reverse this because it's a resistance. Reverse. But like basically, we're just looking for sellers to try to defend this zone, right? And that's that 62, 62.5 area. And that's that. If sellers can't push back up, or buyers can't push back up, and this area is defended, right? Like that's what we're looking for continuation down. By looking left, can you see why we do like our chopping here? Just like previous range, right? So we expect choppiness here and then direction to be chosen. So really another great stacked. So we broke below the orange. We had our validation level built, rejection for continuation, right? Yeah, R2 IP one for sure. It's VIX VWAP and R2I VWAP. So again, it's like which way do we go? I don't really see a good Microsoft pivot. It's really up to Apple, Tesla here to hold. Or sorry, not Apple, Tesla, Google to hold with XLE. Well, really the only things that have quote unquote strength. Slight divergence setting up on tick. I can point it out for you guys before the signal pops, where we have this yellow and this. I want to see like price hold above this, like the 62, 63. If we just see like these sell candles like this, then we know that opening range low probably won't hold. But again, it's just where we're bouncing makes sense when you think of where the previous buyers were from this range.
Surely expecting the result from the Federal Reserve repo operation.
Yeah, nice little divergence play. You only get continuation if you can hold this area to reclaim our opening range mid, the 39.64, but it's just, it is what it is. So it's a bear flag until invalidated. Great job, Leighton.
100 counterparties T2s for 134 trillion dollars at best group operation.
We've captured like 55, 60 points today, which is pretty nuts. Talking about this. Yeah, I mean, it is what it is. So far, this bear flag's playing pretty spot on. I'm just looking for like 55, 56 for rebid. Staying this short from 72s until either we get like these lows to fill this imbalance, right? We're gonna get like a bounce, and then we get our bigger bounce here. Or we come back up, and then I'll just invalidate it, break even. I averaged up a bit at 3964 resistance, opening range bid there, but it was worth, it seems. Bid around. The key for me is to see Vixie VWAP become support. It's like 9.4. And for what are we looking at? And for Apple to like come back down to ADR. But it seems like it'll be pretty choppy. We've got some buyers on our underlyings in these areas. Yeah, but like the problem with XLE is there's so much support below, like that 84, 85 area to like 84.95 is like VWAP. And then the bottom is like ADR 84.6. So like yeah, we can get a breakdown to a VWAP, and then what, it just like chops. As long as it just like oscillates, I don't really care. But until we break below VWAP, it'll be it's like not much there. So this is our first test of the imbalance. See if any buying steps in. Initial push down. Oh boy, I need caffeine. I'm gonna take 2 contracts off into this just in case this bounce that we were looking for holds. If not, all we do again, like this is just FEG plane up type number 1, right? So you take the high to the low, and you look for this to be resistance for continuation down, and then you play to the mid, and then you play to the low, right? Then I grab some caffeine while we're waiting for this. All right, so that's cool. You guys get to see that play out, right? So that's play type number one, where we bounce at the high of our imbalance, right? You just put you just do a measured move from our most recent high to our most recent low. That creates your resistance there. And then we look for rejection. We're now at our mid of our imbalance. This is play type number two, where we look to see if buyers step in here and you play that up. Same system again, which is just this, right? Delete that. And then full imbalance fill, we would look for a range to form in between this imbalance, filling out this low volume node. Failure to hold these like this 55, 54 area, you are most likely looking at new low of day. I'm gonna turn off our 30-second range because I already have them labeled. It was just there for reference for where we were looking to reject. Walking through this short, does it make sense to you guys? Are you taking it with me? I see Leighton's in it. Anyone else? Or are we just waiting for a bounce target to play long? All right, cool. And what I've been showing you guys, like referencing, is just what we have in the pins, that image that I made. When I talk about play number one, play number two, play number three, I'm referencing these three moves that are very common in imbalance areas, where you have the top bounce, and it's a measured move from the impulse rejection of, our middle bounce and rejection halfway, and then our bottom bounce here, which is your play number three, where we're looking to see reaction into our mid. We either find buyers here who are in from the previous range, or we reject this and then get our continuation down. That's what I'm referring to when I talk about like play one, two, or three, and where I'm posting these resistances. I'm gonna delete these now that they've played out. I haven't heard the new spot in a minute, but I think. So I took off half into this low here. So I only have 4 MNQ left from the 20 that I started with up at the highs. I'm just talking about, so you just hopped on voice. So what we were looking at earlier when we were catching this low here, is that this is like the original bid from the lows, and then we had a stop run on the break of this, and then we had our rebid of this area. So that area that I was looking at is referencing just where the rebid took place, where stops were punished, our shorts were punished, and we had a push up, and then real buying stepped in at this basing for the continuation up. So it's like that 53 area that Leighton's looking at, or where our target is kind of that last ditch effort for bulls, or we look to make a new low a day, which is what our indicator is also showing, which is really nice, right? It's like either we hold this or we get a new low. Delete that now that it's played. No need for the chart or for the chicken scratch. And we're just looking to see if any aggressive buys come in from our lows here, which is why I took off half. And we can just hang out. Either we go for a target, it looks like 53, 52, and look for buyers there, or we look for new low day. Yep. The first one, I think. Are you talking about from here? This resistance? Just from this to the bottom here. But it's also just opening range mid off of the 30-second. So like if you turn on that new indicator, the 30-second opening range one, that's your 3964. Or I mean, you don't really need either of it because what we have in place here, our orange trend cloud, right? That's telling you where we need to hold for this to be a continuation for downtrend. So it's just in the same area. Just different ways to look at the same information. And just like for that one, it's just the most recent high, it's the most recent low, it's your rejection point, right? And this is why we took off part of our position here because we were expecting buyers to step in and we risk off into a buy imbalance. So we're just waiting to see if they can recover, right? We expected the bounce here, but we expect this to be resistance, this area. Right. So we're either looking for this to become support for continuation up, or this to be a resistance because look at where our wicks are, where the selling pressure is. So we expect any attempt in this area to be met with resistance. And if we breach this orange cloud, you'll see that validation level build above. No PDD for trading futures. Great job, Nicholas. Just saw that on Twitch. Whatever works for you, meditation. The indicator allows for 2 time frames, so whatever time frame you're on plus a higher time frame. So if you're on a 3 minute or a 1 minute chart, I think 15-minute imbalances are really solid if you're trading on a smaller time frame to show like the larger moves of where we're expecting liquidity to come back in. But it's really what you're comfortable and what you see on your chart. You know, and you could have hourly imbalances, but understand that the larger time frame that you select, the less I don't want to say accurate, but the more space it's going to take, right? So like the moves are going to be larger. So where you enter in an hour FEG is going to have more drawdown compared to where you are in a 15-minute or a 1 minute, right? Because we're expecting immediacy in the smaller time frames. Yeah, like I like looking at the 1 or the 3 because I can play those things immediately and I don't need breakouts for moves, right? Like if we just buy the 39.55, we're playing this up to 39.58.75 and we have a guaranteed 3 points there, right? Like I'm fine with 3 points on a 3-minute trade. Like that's great. It's amazing. The less time that I have to have capital on risk in market, the better for me. You know, if I can get in, be right immediately, and then get out, wonderful. If I'm like swinging, then an hourly FEG might be more important to me because I can build my position in that zone, looking for a rebid of the area, and then I can swing that. Just like pyramid orders in. Like, let's go back and reference our image again on what just played out, right? So it's like either we get this continuation here where from our bottom of our imbalance, we get our bounce and we don't reject the top, right? We're looking for the mid to hold to show that buyers are creating a higher low here. So we want to see a higher low form for a continuation up. If this is our high and buyers don't step in, then we know that we're looking for a continuation down, right? So like your two plays, what's actually happening on screen right now are this is what just played, which is this move, push up. Now we're looking to see if a flag can build here and a higher low can form, and we're looking for this base for the push. And you play it into these highs. Failure to hold this, we look for a break below and continuation down to our target, which is that 52-53 area. Yeah, I don't even actually have Patty on this chart. We've been referencing this one so much, I've been sticking with it, but if you look on Patty, we're trying to hold that higher low that I was just talking about, right? So we have our new low established, AVWAP comes out, and we're trying to hold this higher low in that mid of our FEG, right, for that push up. So again, we're looking for that move for continuation. We see that NQ has a little bit more strength than ES, so this move is either NQ is either lagging or this is an oversell, right? So we have to see what happens on NQ here. Does it hold? Because if it does, then we can buy the double bottom here if NQ's AVWAP holds. New 15's just opened, I think. Yeah. Great trade, Leighton. See you later. Great example of just needing one good setup. Again, we're watching this area here. This is target from our indicator. We're looking to see if this pivot holds. This 11,960 has been pretty strong pivot on NQ. So we'll be looking to see a reaction. I just exited more of my short. That's another 20-point move that we just were able to capture. It's like our indicators work and were developed by my trading strategies. It's like you have a little mini SIG in your brain. Oh my god, Tatum. Ugh. Oh boy. I don't know why everyone thinks that's me. It's my friend Yael. I guess it's just because it's my photo that I use for everything. Let me see if I can find the finished painting of that. Adrian. Excuse me. I do, but I don't really use any social media anymore. I've had the same like 5 clients for like my entire time I've had a company, so there's really no point. That image is based off of this painting that I never finished. It's way too big. It's just like a thumbnail from one of the like the early block-ins that I did. Dude, I was doing like 50 to 75 viewers on Twitch when I had an e-girl photo. Actually ridiculous. Yeah, right, Avery. True, Singe. Why do you do this, dog? Oh my god, you're the worst. Alright, you're trapped in here with me. Yeah, so if you exited shorts or if you tried longs at 52, again, we're just playing into we have our current range is what we were trading earlier today. It's just the 52 to like 55 area. Until either one of these sides break, there's really not much to do here. Just kind of a balanced area between buyers and sellers. We break the like 52, you can look for a lower, but again, this is that pivot that I was talking about. It's that 11960 on NQ. Pretty big deal. where we kind of just are oscillating around this until we choose the direction. Yeah. So I'm not in anything right here. I just have I have one contract left from the highs and we'll see. And I'm willing to just take the other side and let that thing run because I don't know if we get the 72s again today. But just waiting to see which way we break. We have our two targets that have been created, kind of giving you an idea of where we need to break and push. It's like either we recapture opening range low. So I'd be looking for, if I was trying to play long, a bounce like this, and then kind of a chop and downwards push, and then continuation, right? From our VWAP, kind of build this out, hold our opening range low, and then kind of play into our opening range mid, and either hold that and then push. That's kind of your bull scenario. Oh boy. I mean, I've covered this in my video. I don't know if I can really talk more than that. I mean, you're just looking for general direction meditation. Like wicks show an aggressive move out of the area, right? Uh, Bodies show where price opened and closed on that time frame. And you're just looking for directionality, right? So we can take this is why we've created these channels to show overall movement or direction. Uh, if we see like strong wicking in our zero area and the inability to close above, uh, right, like that's a good sign that there's a seller present, and we can see that being matched up with what's happening on price. But I don't know if I'd really look into it more than that. I mean, it's just a general uh a general sentiment check, right? Just like with anything else. I mean, a candle is a candle. Wicks show acceleration out of an area. Bodies show where participation is located. And yep. The divergence of where we're taking the divergence signals based off of bodies on tick with like these are taking bodies because it is a more confirmed version. If we took wicks, you can get like we don't actually see this higher low here, right? We don't see this bullish divergence here because we wicked below, but we care where it confirmed. That's showing an initiation to keep us where price closed. We're still forming higher lows, right? That's what matters to me. Just like on a 15-minute chart, we're waiting to see where the 15 minutes close, not where they participated in the lower wicks. We're waiting to see where price confirms. So where it closes is a confirmation, whereas wicks represent the area in which price traded during that time. I don't know if I can explain it better than that. And then it's just kind of a critical thinking on you, right? So like to me, you have two different ways to look at this, and both are bullish in this case, right? You have participants that are stepping up and creating higher lows on our bodies, right? But every time we do wick below, you see that buyers have stepped back in and pushed price back up, right? We have aggressive wicks on the top here, creating this trend, right? It's a small trend, but it is a trend where we're creating these higher lows, and every time we attempt the lows, we see strong participation to push us back up. And you see at these highs that we have a seller clearly here, and that's why it's highlighted. And it's like we need to be able to hold this area for continuation. So we know that there is a buyer in these lows, and we know that there's a seller in these highs. So we either need to build these higher lows and eat up the seller, right? And that looks like a flag. And then once that seller's eaten up, we can see the buyers at these lows step up and push us. But I mean, it's one of the it's a screen time thing, really. the more and more you look at it, the more and more you'll recognize the patterns and like the acceleration and the push, the push and pull of the market. Oh, look, so this is that invalidation level, right? So we pushed over our orange. I always miss it because I'm talking, but like we needed to validate over this 11 981.75 here. Failure to do so brings us back down, right? So that's lines up. We made two of these when we crossed over, and it actually lines up with our previous target as well. So that's really nice to know, right? With this invalidation that was created here. Yeah, I mean, because the Wix versus bodies thing is more like a nuanced, just like you need screen time. Because again, it's just showing. It's just candles are just a way to show condensed or consolidated time, right? We're just showing where price went and where price is in a certain amount of time. So once you understand that, it kind of applies to everything. Your wicks show your high and your low. Your bodies shows where open and close. It's a red candle if we're below the open of the body, right? The open of the candle. It's a green candle if we close above the open. It's that simple. Retest of this NQ pivot, our bold yellow line. See if this is the bottom of our range, and we're just going to trade here. Interesting little divergence between NQ and ES, with NQ basically just being sideways, ES kind of making a new low. So we need to see if this NQ pivot can hold or not, or if ES is leading down. Again, failure to hold in hold 52, like this 52-50 area as support. And this NQ pivot, we look for new low a day, I think. It's rough trying to take a new short position from here, but it's really nice if you took a short from the 75-72 pivot on ES, right? So we're just waiting for confirmation if this is a bottom or a continuation of this downside. I don't know how much more ammo the market has for us. I mean, we've captured 3 20-point moves. It's a pretty good day. Like Mario says, like he's expecting to capture like 3 5-point trades in a day. So we've done very good. This is Vixie holding VWAP and now pushing the high wicks. There's lots of room above for Vixie. Just kind of waiting to see if NQ can't hold this pivot and the Russell loses any strength. Again, ES is by far the weakest of the three names, RTY and QES. I'll be right back. Give me like 1 minute. Yeah, I'm waiting on Apple and Microsoft to have some confluence here, so waiting to see if what Microsoft does into a potential double bottom into like 246.60. And I think that could be like our 39.50 area where we wick in and then a buyer steps in pretty quickly. I don't know if that's like a lasting trade, but that would be like our Microsoft double bottom and Apple ADR low. If it does happen, would be around here, I think. Yeah, so you have buyers already trying to step in on Apple, and Microsoft, you have buyers trying to step in at this value low. Again, I don't know if it lasts, but good, great call, Flex. But like, you don't even need it to last if you're buying that, right? You're already can set to break even with like very limited downside and capture 2 points. And then we just wait for 50s. But like, it's worth trying a contract there, right? Like a singular contract. And then if it holds, then you can scale, but you have very limited risk by only having one on. And then you can always like scale in, pyramid in later. No big deal. And then you reattempt at the new low. Again, like we're just trading in this range on NQ. And of course, this is first target being your 15-minute halfway back. Watching to see what Tesla does as it retests the highs again in ADR. Yeah, DXY is so flat today, it's crazy. Hit a wall. Mm. You're going to get a lot of hedging today. You have Tesla investor, whatever it's called today, investor meeting, the conference, after hours, investor day. Yeah, true, Kiz. Well said. I'm gonna assume that Tesla Day, like jumps after hours, and then immediately sells off. I'm pretty bullish on Tesla as long as we hold like 194, 197. That area has been a pretty solid buy every time. You see what I mean by this bottom signal with the tick, where like we had a either divergence or all three were confirming, and then we get to like this gray, and then we have all three going up. So with like our bullish divergence here, and then we switch over to green, like we kind of have more confirmation or more confidence in this buy with tick actually moving with price after the divergence. Like I don't know if we break the range, but the entire market is with us on this push. And this still applies. That's why I've left it. I just need to move it over. It's the same thing, right? We're just looking for a reclaim of opening range low in the top of this range for continuation. Or this is the top, right? Playing the range until the range no longer was valid. Then we look for the top of the range to become support on a retest. So if you're in from the lows, you take off here, you move your stops up, you don't let that trade go red. If you're not in it, you wait for this to confirm and build and show participation for continuation. I'm not in this. I was waiting for 50s. Yeah, and Google with an L, it's just holding view up. Pretty aggressive seller on the Russell there into the top of range. You see what I mean by just like respecting the range until it invalidates? There's like no reason to let a trade go red if you're in from the lows. You sell at the highs and you move your runners to least break even or a little bit of profit. And you just can continue to play this range until it doesn't work. Imagine. Names like that just trade in a box all day are my favorite. I was talking about this a little bit yesterday. In when I was like mentioning the like find what's oscillating just in a box and find what has like movement, right? Actually has momentum. And then you have two different indicators. One you treat as an oscillator and one is you treat as the trend, right? And as soon as one of like we're at the top of the box, oh, that's a pretty good sell signal until that invalidates, right? Like 90-70, we're at the top of the oscillation. Okay, I should be risking off here. And if like Apple is trending up all day, then we should, as soon as we see that it's at a pivot and it's losing strength in that like channel going up, okay, that's also an area where we need to be starting to risk off. You know, like two different underlyings that I always look for is like what's currently in a box and what's currently trending and where are those pivots going to be. Once we've identified them, then we have way more market generated information to actually play ES off of. I have a space heater. Can you hear it? It's pretty far away. It'd be really weird if you could hear it. Your ears can detect it. It's your musician ears. Honestly, I could probably turn it off. It's like not useful right now. There we go. Mario still uses the three. I like the three a lot. I was using the three because I think it does a really good job taking away a lot of the 1 minute chop. I switched over to the 1 minute when I started doing the tick alerts into server chat so that I could validate them, and I've just stayed on it because switching between 1 and 3 minute every time an alert comes out is a little, I can't be bothered. And now I've just been trading off of the one because of that. But like the alerts that come into Discord are based off of the 1 minute and the 3 minute. So instead of having to switch back and forth every 5 seconds, I've just been using that. But I think most people should probably be on the 3 minute because they're going to get emotional on the one. Something you can do if you want the tick on the 1 minute, but you want your chart on the 3 minute, is you can actually change your layout to. I'll do it on this one. So if we wanted this chart to be on a 3 minute instead, we can change our layout type to be a top bottom like this. So two charts. And then we can change this to ES. And then we can put tick, copy, like this. And what we can do is we can maximize this bottom pane so that it only shows the bottom indicator. And then we can have this one on 1 minute. So now you can have both charts, right? I can take off this one, and now I can be on a 3 minute chart with a 1 minute tick. I no, I mean I don't really not recommend it. It's really, again, it's going to be like what makes more sense to you. If you feel like you're getting emotional on the 1 minute and like all of the choppiness and the smaller moves are messing you up, then I definitely recommend doing that if you still like utilizing the 1 minute tick. But it's really just going to be a matter something that you're going to have to figure out what kind of candles you like to see and if you're able to read them. Um, is tick on a smaller time frame beneficial? It depends on your trade size and your trade plan. Like, you can more easily spot divergences, right? You're gonna be able to spot divergences easier on the 1 minute. But like, think about what tick looks like on a 3 minute here. So like this, like your wicks are going to be more important on the 3 minute because that's us pushing out of that area. So every 3 minute candle is three candles on the 1 minute. So this move of catching this divergence is going to be easier to see on the one because it's just a smaller. We have more candles to actually see that, right? But like on a three, this is going to be one wick that pushes up. So like that's when those like wicks become more important because you're seeing participation here and you're looking for those higher lows on a 3 minute, right? Like that's what it looks like here, right? Where we see a higher low. But on a 1 minute, it's, in my opinion, it's just clearer. So, but like are you trading a 2 minute scalp? Are you trading a 1 minute scalp where we're looking for that divergence early? You know, like again, it's going to be a personal preference. I'm still just waiting for these 50s. It's like 49, 50, 50 area. Yeah, and again, like that's going to be one of those things that you just need to forward and back test and like see how things play out, and you have to just train your eyes, right? The more screen time you put in, the more clearly you're going to be able to see these divergences and see like weakness and all of that. It's just a screen time thing. Indicators will always be lagging because we have to have a look back. So like these divergences like this won't be spotted until the next, like, I think we have a 3-candle look back on here. So until we get to here, this won't plot. So if you're able to see them before that, then great. But like all indicators are going to be lagging. There's no way to get around it because we need to confirm what price is doing. And that lag can be pretty detrimental if your trade plan is to take a 1-minute scalp, right? You're now depending on continuation, and you don't always get it. It's a really good example, again, of a bullish tick, where we have a flat price with a higher low on tick. And then you just look for follow through on that signal, right? We want to see a continuation of those higher lows. We want to see 0 on tick hold. We want to see price continue to make higher lows for that push out. So the divergence has been spotted, but now we need to see follow through from the market. Where our indicator marked equal lows, EQL, this is flat price here, and a higher low on tick. It'll mark equal lows for you. You see how our green lines here have created a flat range, and our tick has created an upward angled range, right? Our channel. That's a divergence between price and tick. Yep. But again, like, we need the follow through. Until we see tick break over that 0 and hold for that secondary base, like, it's just a signal. It's not a signal, it's an alert of potential divergence, right? Like, there is divergence there, but without the follow through and the break over 0, there's no real play. Just because we have someone that's we have less selling pressure in the market does not mean that we have a more aggressive buying pressure, you know? Still watching this like 49.50 area. See if we get any participation there. If not, then it's probably just like new low day. Okay. Let's see if anything happens here. Ideally, we get like a tick extreme and an immediate buy back up, and that'll make for a nice scalp. It's like basically now or never here, or we create that new low day that I've been mentioning.
NYMEX WTI crude April futures settle at $77.69 a barrel. That's up 64 cents or spot 83%. Also noting NYMEX gasoline
I
April
don't know if I
futures.
would call it seller exhaustion, but waning selling pressure, right?
And NYMEX diesel April futures settle at
That's the way that I look at it.
$2.83. Well, so just noting US stocks here extending their slide in afternoon trading. Nasdaq now down around spot 8%, with the S&P down around spot 5%.
So far, really no acceleration out of the zone, right? It's a little choppy. There's an attempt to buy, but like nothing really to like give you confidence to be long here, right? So like without that confidence, you should either, if you're attempting here, you want to make sure that you have like a tight stop and you don't get caught on the wrong side. Because remember, it's like either we find participants here or we create a new low a day. Those are your options. Do you want to be trapped in a call or in a long if those are your options, where it's either like a push down, new low, or
Highlighted.
you want to take a little paper cut, be wrong here, and then wait for that new low? you know?
Fell after a gauge of manufacturing earlier today improved for the first time in 6 months. Investors balked as prices paid measures also rose. Technology companies, which are typically sensitive to rising interest rates, dragged the S&P 500 lower, while energy remained the index's best performer today so far. So speaking of that, also seeing NYMEX natural gas April futures here selling at $2.81.
So for me, it's like I'm willing to take one contract in this area, and if in the next like 2 to 3 minutes, if we don't accelerate out and we just chop here, I'm going to exit that trade because we're not getting the movement that we need. There isn't the buying pressure here, right? Like I'm not comfy in that trade. Understanding where like these choppy zones will be is great, but like the acceleration is the next like ingredient you need for the good trade. So until we can break back over like 51, 52, I won't be happy in this low. But we had to wait for so long. Like if you weren't willing to play that range, I've been waiting for this 50 area for like an hour. you know, is it worth the wait for 3 points? I don't know. Yeah, and like flex again. This is that 246.50 area that we were looking at on Microsoft for a potential like double bottom for buyers to try to step in. We finally like are now here with XLE holding VWAP for the break. But that's it. That's moving. Like we have Google selling and we have Apple selling, right? So like this move is we get a singular contract, right? We're in very light here, and what we're expecting is that all of our underlyings are going to retrace to at least their halfway backs, right? And we're taking profits into our next pivot on our underlyings. And we expect choppiness here and a small push up. If they're able to then like confirm over those halfway backs, great. We now have the bottom. If not, then we just traded like the bottom of a bear flag, right? And we're trading into the previous range pivot. Like that's how I see it. It's like either we got the low of a bear flag, and then all of our like 15-minute charts, it's just going to be a retrace to retest the halfway backs, or there's no trade, right? It's like either we get out to this break even, or with profit into the top of that range, and then you just leave a runner for continuation if we got the low. And like I'm willing to risk that there because of that. But like compared to all of our other trades, I mean, this is probably like a 5 out of 10, right? Instead of like the 10 out of the 10 setups that we were looking at earlier today. I mean, you should feel comfortable getting out at break even, and then if we see higher lows form, being able to step back in, right? Like if this choppiness comes in, we're looking for a higher low to develop. You can stop out here on that runner if you need to. But what you can do is that you can try again. So like if you're in from the lows, you can buy the secondary higher low with the same stop as your original, right? You're adding on to your position with the same plan. You're getting an average of the two lows and you're looking for a move out with the same stop as your original add in. What was better about the other ones? We were at larger time frame pivots, and there was more volume in the market at the time, and we had more signals to kind of like let us know to take the trade. Just better pivots and more things where they needed to be. And we accelerated out of the zone much more quickly. But like again, this low makes sense to try. That's all I'm getting at. Right? And like this is your first PT, the top of this range. So you move your stops up here and you look, because either this is going to be a bear flag and a failure from buy side and a continuation down, or we caught the low. Uh, yeah, I think that you could consider this an imbalance, right? Because what it's the setup that I like, I teach a lot, which is you have a range and then you have this vomit of red here. And what a bear flag usually does, oh my God, what are you doing? Is it basically just fills this vomit, right? So we're coming right back up to where we had like a big sell off, and it fills that imbalance created, low volume sell, and then we
Wasn't
push up into
one
this. And that's why it's first target, right?
or one spot
So
zero.
if it can continue to make lows and recover this like doji that's here, right? We're able to recover this level, then we can go for the continuation. But we're just playing up into the previous range. So just like on ES, we fill this imbalance that's created where we are one time framing down, right? We've now filled that, and now it's the test. Can we keep up with these higher lows, or is it a market sell, right? Does that make sense, Nick? Yeah, and you can see that on a footprint chart as well. Here, let me pull one up. It'll show you the exact same thing, but it's very easy to see in candles as well if you're just looking at it from that perspective. So like here, same thing, right? We have this is that sell off, and this is the original move up. So all we did in that candle retrace is we pushed up into this imbalance that was created here, right? Right back up to where that seller was. We hit that seller, and we come right back down, right? So we're just filling out this poor structure here. And that's just that vomit, and then that creates the bear flag. And then we get a continuation if we're unable to reclaim. And like all we've done now is we're just establishing a range, right? We're still creating the higher lows. We get our anchored VWAP bounce, and we're just waiting until we can break back over this like 11,960 and this 3952.50, right? Like these areas, till we can make these new highs and hold that, right? Hold this. This is just the range that we play, and we just look for the higher lows in this. If you're going to try to attempt the range, you're either shorting up here or you're trying long down here with a tight stop, right? Like those are your two options, or you do nothing, right? Like that's always your third. But the initial sell always makes sense because what we've done is we're just retesting the seller that was here and filling out this poor structure. And I think looking at the 15 minutes here of what this looks like is pretty important. What does this range mean when we have a sell-off and then a bear flag? What does that look like on a 15-minute chart? Well, it looks like a 3-bar, right? Push down, consolidation, and then breakdown. Yeah, that's not a pretty chart before that move. Looks like we'll probably test these lows, chop here for a second, come down to ADR. As of right now, it's nothing really significant happening. Pretty slow bleed. So either we hold these equal lows, just like 39.48, or we come down and test the ADR. I really don't see like any, like these are just little scalps that we're doing end of day now. We actually caught all of the major moves. So it's just like size down, don't lose gains from the day. No way you should end the day red off of 20-point moves that we captured. And as these like 15 minutes candle ranges build, right? So like the 15-minute, we're waiting to see if these 3 bars turn into 3 bars down or a 3-bar reversal, right? So we have the body of the candle holding so far. We have first PTs for upside. It's your high wick. First PT downside. Break below this, we look for our next area. It's going to be here, right? Confirmation under our wick, continuation. Understand that we have 9 minutes left on this candle. So we have 9 minutes of potential chop that can happen from this low, where we can push right back up, right? So that's why this is first target. Oops. All right. Shit, what was our... Okay, we're here. Yeah, so I expect the buyer to try to come in here just lightly, right? And try to hold this. This is our 4-hour range. Retest the bottom. Right, this little chop. And then if we get continuation, it's because it's buyers aren't willing to step in and they're waiting for these lows before they try. Yeah, right, Ty. So this is where we were thinking that buyers were going to step in, right? Just to retest, see if sellers step in again from the break of the bear flag. But if we look at our 15-minute charts, this is what I was talking about with the 9 minutes of chop that's left, right? Look what happened. We came down to our zone, and now our candle is coming back and retracing all the way back up to this wick, right? It's like understanding that you can get really chopped up. So having your targets being developed. Oh God, echo. It's like this is that reaction we're looking for, where we get a retracement and this wick becomes resistance. Either this is our resistance and we keep going down, or it completely gets eaten up. That's what I was talking about. We wait for the 15-minute candle closes or stuff like this can happen. And that's why we develop the targets early, understanding where we need to sell and where price needs to close to confirm. I need to just delete this chart. All right, there we go. There we go. So 5 minutes left until the next 15, 5 minutes left until the next hourly. So we did a full retrace of our candle body, found resistance in the previous body, right? And we're just looking to see where this closes, either for continuation or an inside bar. And like this 3-bar down can turn into a reversal up very easily. That's why we wait. Or you play the range that's been developed. Pivots are still the same. It's like 39.52.50, 11.960 on NQ. Yeah, I'll just make this a bold yellow as well. There you go. What time is it? 3? I could see another V from low a day, like a V recovery, and then sell. New hourly, 2 minutes. Yeah, I'd rather get in low 40s, like 41, 40, 41, 42, that area, right? Where our ADR is on ES. I'd much prefer one more leg down and then acceleration up. We'll just have to see where this hourly opens. But volatility in the last couple minutes of an hourly candle, battling of where like closes are, makes complete sense. Delete this shit. If you're in from these lows, ideally you want to see 0 hold on tick, and you want to see like 50s be a solid bid. Yeah. New hourly opening. Again, I'll just repeat myself. Like I'm looking for accumulation over like the 5250 and a build, like a base to build there for a long, or I'm looking for like low 40s. Really nothing else for me. Mm, I'm either looking for 42, 41, 40, right? I'm looking for either ES ADR or I'm looking for a flag to build here, right? And we're looking for NQ to recover this pivot, this 11960. It's the only thing that makes sense. People trying to go long here, they have to realize that this is profit target and where shorts reload, right? So like it has to build out and we have to eat up the sellers that are at the top of the range. Trying to long the top of the range just will feel bad if this rejects. I think that's probably the best way to look at it when you miss an entry. Think about where you would be taking profits first if you had gotten that entry, right? Like that these yellow lines are where you'd be taking your first profits. So are you taking your first profits or adding onto your position? Like it only makes sense for this to be a rejection area because this is where if you and then an initiation from buyers who find value at this higher price. You don't see that. Like, what are you doing, sir? Oh my, 1 second, my dog's stuck. All right, my bad. So I was thinking, would it be beneficial to you guys if, like, as soon as market ended, we did a review of the trades that we were looking at on the day, like live right after market? I don't know, like 10 minutes, you know? Okay, I can start doing that. That's easy enough, right? You see what I mean? People just getting punished trying to buy these highs. Like, you need to see that 11,960 hold as support and build a base out there. Or again, you just have like this bear flag from from the range. It's really hard to try to want to long that. You want to see 51s hold bid, and then a push and a break over like 39.54s, 55s for continuation. It's really, there's just, that's it. Like, that's the only trade. It's either like we catch the lows and like 40s, or we wait for the 52s to become support with confirmation over like 54, 55, and then you play that with first target into 57s. But like trying just to buy the top of the range before it confirms is suicide. RTY leading this move up, retesting POC here. So now that we're testing above our pivot, we want to see a retest of this area. Ideally, right? Just move this over. No retest, I'm not in a position. It's fine. I'll be okay. But I want to see the sellers that were at this like 54, 55 area get filled. I want to see a slowdown in price, confirmation that this is the new value for a push up for end of day. If we don't get it, then more than likely we'll retrace it because we're just one time framing up, right? Creating poor price structure.
So, according to sources, US lobbies allies on possible China sanctions if Beijing gives Russia military aid in Ukraine.
This is VIXI 20 EMA and VWAP here. So it's a pretty I think looking at the NQ 15 minute is pretty solid. So if we go over to NQ, I guess another way to kind of just a thought process, right? This is what we're looking at. We have our range, right? So we're looking for a break of these highs for a potential entry. And we're playing up into the top of this candle body. So we're just filling this pore structure that was created from this cell. But like this area here, where this previous range was, is resistance. So like, are you FOMOing into the previous range here at the bottom of it? Or are you going to wait for this confirmation for then a push up? I think that's probably a better way to look at it on a lower time frame so that you don't FOMO in, right? Because everyone who's trying to buy here, we haven't validated this move. This is just the seller selling again. You're buying into the previous range low. Right, so now we're trying to build a base up above the pivot, right? From what was resistance of our range, we're now trying to build here. We want to see tick hold 0. We want to see a flag build here for continuation up. We know what we're looking for. I'm going to delete some of this chicken scratch. Huge. Again, like the things that I'm watching are just like on again the Russell. We're at POC as resistance. This like 1895.50 on VIXI. We're at our 20 EMA and our VWAP on that 15 minute as well as TPOC. I'll post that into chat. But like depending on which way we go on this pivot will give me an idea if I want to take this flag or not, right? Like we know this is a known area where price is bound to bounce on VIXI. We are at our TPO for the day, right? Oh god. All right, let's see if buyers step in here at our halfway back. This 39.52. This is where I'm interested in. If we're going to hold, I'd love us to hold here. Because failure to hold here and this flag to hold and us to build higher lows is just, it's a bear flag, right, on price action into our known pivot. That's why we're looking for this to hold. We're looking for a 0 to hold on tick. We're looking for selling on the underlyings to weaken and for price to be able to push. You can see the volume ramp down into this area as we're pushing the highs, right? Less and less participation. We want to see that participation come back in and for our pivot to hold. Yeah, the Netflix dump, man, it's nuts. Couldn't get back over ADR low. Just down. Feels bad, man. I feel like they're doing everything they can to damage that company. Are you guys in from 52s here? Set to at least break even. Didn't get filled. Gotcha. You're fine. We haven't broken out yet, right? But like that was what we were looking for. We're looking for this to break. We're looking for this to build, right? What was resistance? We're looking for it to become support. NQ still has to break. We haven't gotten it, so there's no confirmation yet. But that, hopefully, me walking through that made more sense. It's like we don't want to be longing into where people are taking profit. We want to be longing into where people are trying to support the bid. I'm long NQ here. Did you place a limit buy at 52 or enter another way? I hit market buy. We knew what we were looking for, right? We were looking for the retest. We were looking for this to flag and build support. We were looking for a 0 to hold. We were looking to see what the reaction was into VIXI VWAP. We waited and we were patient because we didn't catch this low, so we had to wait for the reentry. Now, again, if you're trying to go for the tick, you're not going to make it. You have to remember that when we're looking at areas like this, we expect price to accelerate out of them fast. So having a limit on 52, when we know that we're going to be moving very quickly out of that area, the chances of you getting filled are like null, right? Where the liquidity there isn't going to be enough to support the amount of people who are trying to buy. And the reason why we push so fast out of that area is because of the marketing in and moving the spread up, right? We're moving quickly through. Market buys accelerate price. So if there's only a set amount of limits at that 39.52, we're going to fill them immediately, and then we're going to jump to the next best price, right? 39.52.50, 39.52.75, and we're going to fill those as people market into orders, and that is going to push price up. I have one contract left here. Sold into our first target on stack 39.57. Yeah, you guys waiting for like that perfect entry. Like we know what the plan is. We're looking for acceleration out, and the reason we get movement is because people are willing to market in. There are only so many limits on the DOM, on the ladder, right? Yeah. Last contract's down at 1156.75 here. But I really need to get you guys to like think about it like that. Like we expect acceleration at that area. So we either, get the fill exactly on tick, or we look to uh just kind of go with the Momo, right? We look to follow the push up. Yeah, I mean, but like again, like it's so situational meditation. Like I can't give you a solid answer there. It's really like looking at what we're expecting, right? Looking at our underlying, seeing what we're looking for, which is the pivots, right? So if VIXI is at our major pivot or inflection point, if RTY is at our major inflection point, we're looking for those to hold, and if that's like meeting the criteria, then we try to take a bid. It's that simple. I don't. There's not really much else to. I'm probably gonna get stopped out here. We'll see. I might go for another play, another long if this holds for a higher low. We need to delete our flag. Yeah, I just got stopped on NQ. I'm gonna see if I can get another entry. Got divergence between NQ and ES, with ES holding a higher low. I just expect this to be a retest of resistance as we come back down into here and see if, like on VIXI, we're below VWAP now, trying to hold that as resistance. RTY just recovered POC and trying to hold that as support. NQ is by far the weakest here. ES still holding its halfway back from the previous 15-minute candle. So as soon as like NQ gets any sort of movement, then we have acceleration. But like, why were we willing to sell half intact developed Taurus? This 59.57.50, we literally ticked it and then sold. Right? We know that there's a seller here. Look left. What are these wicks telling us? What are they showing us? Why are we willing to take profit? My man's on the 23-minute. I gotta pull that up. Oh, I love your time frames, Julian. 23. Oh yeah, that's nice actually, because it's holding the body of the previous for the potential reversal. That's not a bad time frame. Yeah, I mean, even here, like, look at what we just did. This was where we were looking before for that imbalance that was here. This is where we were looking for buyers to step in. This was that FEG that we were playing, which can confirm above. This is still resistance. This is our mid from that imbalance that we were playing earlier in the day, right? Like we have to be able to breach this and hold it as support if you want that downtrend break, or you sell into the previous range, which is what we just did. We look to see if we can find a supportive bid now at a higher low from the previous structure, right? The previous range. We look to see if this can hold, and then we can go in again. But like Apple not wanting to play is not great. Apple new low a day here. Yeah, exactly, Prosper, right? And that's what it is. That's why it's like if we don't get the breakout and confirmation of the higher lows, we've just been playing a bear flag, right? Until we can break the previous range or the supply that was here, right? Like it's a bear flag. We look for a new low and then we look to try to play that. It's either you've got always like two trades. Either you're trying to buy the lows or you're trying to short the highs, right? Or you're waiting, and that's that. Anything else, it's just a coin flip, probability wise. Like you want to be where other people are going to try to find value, especially in these like areas of just chop and low liquidity. Like your best odds in a low liquidity environment are going to be trying to buy where the higher time frame traders are buying, right? At our main pivots instead of made up pivots that we've put on our charts ourselves. But like I'm not mad at capturing 5 points from 52 to 57, right? Like I'm not mad at that trade. It's fine. But do I want to wait an hour to try to get a 5 point move? No. And we just saw this setup before, right? It's the same thing where we have a vomit down, an imbalance is created, poor structure is created, right? So we have a low volume area, and we are going to retrace that area, and then we will find if a seller is there or not. So you can easily just put like a retracement, right? We're looking for price to be able to hold this, or it is resistance. We're retracing the imbalance from the poor structure. Either sellers step in to push us down, or we're able to build here, flag for a push. But until we get over this, there's no long trade in this little movement here. This is our validation level that was just built off of our stacked, right? So we broke below the orange. So we're looking for price to get underneath 39.49.75 and build, right, for a continuation down. That's what that's telling us. I hate the end of day chop where everyone tries to like take plays and missed out on all of the moves that were called earlier in the day. Where were you guys before? Hmm? Car sounded like a golf cart. All right, fair enough.
Early market and close imbalance, 216 million to the sell side.
Yeah, it's just not worth. Yeah, bot sounded fine there, Tom. I want to see what we're looking for here, in my opinion, is just a little dip into 49s, and I want to see aggressive buying for a pushback up. If we don't see the aggressive buying to reclaim this 39, 49, 75 area, right, on a dip, then it's a continuation down, and we'll play it to ES ADR. If we do see this buyer here, and I see a move up, then that's like a nice little low we can try to snag for a pushback. Again, like I've called out 4 20-point moves today. We're now just chopping. We've taken literally everything that the market can give. So you're playing for crumbs end of day. So size accordingly, right? I know I talk a lot, so I'm just going to go over it again. The only two buys that I'm willing to look at is a wick buy and an aggressive push out of 39.49, or a reclaim of this red area as support. Those are the two trades I'm willing to take long. Either a push and hold of this for continuation, or a wick down into 39.49, and then a push back up. I either want to buy I want to either attempt the absolute lows, or I want to buy the retest. I don't want to get caught in the middle of a range. When in doubt, go to a higher time frame and see what this looks like. What are we doing on a 15-minute chart? Is this an area where you want to buy in the middle of the range? Or do we want to wait for this to become support or try to buy the lows, you know? You guys have to keep that thought process up that I'm doing constantly on mic of just like, what are we looking for? Where, if I was in this trade, where would I be selling? What are we looking for once the sellers are gone in that area? It's a nice zero hold on tick so far, bottom of our range, right? So it's like either you're trying here or you're waiting for confirmation above, right? Bottom of our range on NQ, and we held our pivot on ES. This is the same setup as before, where NQ is leading down, but ES held strength into our pivot with tick holding zero. It's literally the same setup as what we were playing from before. I'm not in this trade. I was busy talking, but like this is the buy you're looking for, the flag and push. Trying to buy the NQ pivot itself is just again suicide, because we don't know if we get confirmation over here. But if you're buying the lows, you have the highest probability of being able to get out of that trade break even and having the best average if we aren't able to break downtrend. And I keep stressing it. All right, guys, this is we either want to see a strong bid come in here to accelerate us out, or I don't like it. For all of you pattern people, we're looking at a left shoulder ahead and a higher right shoulder, right? On like a smaller inverse head and shoulder. You want to see this maintain a higher low. And you want this to build and eat up the cells that are here, and then buyers to push. Failure from buyers here, again, I just won't touch it. There's nothing for me. Yeah. I mean, Apple's not participating until you see Apple start to care. Well, what are you looking at to actually push the market up here? You have to see Google push over VWAP. You have to see Tesla hold ADR and push out of this range, right? Like the only things that you actually have running right now are XLE, and that's about it.
Early market on close
Literally nothing
imbalance, 216 million to the south side.
So if Apple can find a bottom, we can play that back up to the halfway back for Apple. But like you have to understand what's moving and what's not. This is the Russell VWAP again that we rejected off of last time. This 1900 pivot. Are you guys like getting me? I know this is a really tight range, but like I'm trying to do my best to narrate it in the sense of like where we're trying to find buyers, right? Where we know there's a known pivot here on NQ and NQ is the weakest. So it's like we sell into this or we move our runners up to break even if you're trying to play this. And until this confirms above, we know that this is our high, right? This is our high. We play the range until this 11,960 becomes support. There's like really not much more there. Like, I don't want to cause FOMO in this tight range. I'm just trying to explain price action as we have like no movement. It's a good area to try to learn. So for ES, we're looking for 57, 58s on a break. We want to see those become bid, 56, rebid. I will draw it out just real quick. So on a push, a break of our range, we're looking for a pushover, and then we're looking for like this area to hold as support. On a break of this 11,960 pivot, we're looking for this to break over, flag, and become support for continuation up. I think VIXI was again like this VIXI VWAP 20 EMA has been really solid for directionality. Right, like we saw the 20, we saw the TPOC here, so where that's spent the most time on the day. So we know that if it's unable to break, we have this 3-bar structure down. It's really nice sentiment check. I mean, just watch to see this build, right? Your next target is 60, like 6050, 60.50, 61, and then above that is 6450, 65. Need to be careful as we push into 1902 on the Russell. That's our TPOC. We're finally testing above VWAP here. NQ is still just trading in this range. Going back to our NQ 15-minute chart, right? This is our known resistance here. So until we can recover this, this is our downtrend. This is the top of our range. So we're selling into this or moving our runners up, our stops up on our runners, and we're going to let this, we're going to see if this can build. We want to see that 11,960 area hold the support for a continuation back into our previous range.
Early market on close imbalance, 72 million to the sell side.
That's literally nothing. Just gonna look at this real quick because we know what price is going to do here, right? We want it to build and flag for continuation, but let's like look at it from a structure perspective. Just real quick, let me bring up my drawing tool. Why are we looking? So this area here, this 65 to 60, do we see why this area is resistance? So we're testing the lows, we're coming back up. This is the previous balance area, and this is where we've got our POC and our TPOC for the day, and it's the peak of our distribution from this larger area that we've been building out. And this is like until we can reclaim the 68.570 area, this is the top, right? Like there's nothing else here. It's the top of this distribution that we created, right? You've got a D, and we're trading the balanced areas as of right now and chopping in between them. And until we can break and hold that, we can't come up to this Globex distribution that we created in the 8590s. And that's why it's so rough trying to like long in here, because we know that this is the top of our range right now. That's why I said, like, we're going for crumbs here end of day, and we've captured most of the moves that will happen. I think you can easily target like 6350, this like 6350, 62 area, VWAP day open, retest. If you're long, I think that would be my target, and I just move to at least break even. Oh, hello, dog. Thank you. Welcome. She's so mad at me for still trading. She wants to work so badly. She just keeps coming in here and be like, "You're still going?" We'll let you know that she's got to wait even longer, because we're gonna do a little review end of day. A little treadmill. I should. I don't know if she would use it. She's pretty scared of everything. I think our Rottweiler might use it, but I don't know if she would. The beagle in her is a little scaredy cat. Yeah, I think that's yes, a little bit more accurate. Chat's pretty quiet today. How are you guys feeling end of day? Do you have some good trades earlier? What's going on? Are you guys long, short, waiting, just watching, learning? What's going on? Decent day, small size.
Market on closing balance currently sitting at 63 million to the sell side. We'll just wait for the final orders to come through before we call it. Market on closing balance 446 million to the sell side.
That's terrifying. Yeah, it's a good rule. If I don't see much more of a push down here, this might be another good entry. I'm gonna wait and watch the tape a bit. When I don't see strength in those end of day sells of just like firms closing, positions, if I don't see continuation off those are usually really nice little buying opportunities for a retrace of the entire thing back up. Yeah. If there's not much follow through, those are usually pretty solid little moves. That's a great idea, XY. Yeah, so that move right there was just end of day closing of positions with market on close, wrapping up, people going flat or rehedging what they need to. And then if there's no follow through on the book, then you can kind of get a retrace of the entire movement. That's why you see on like the days where we are selling in the last hour, and then the last 15 minutes, you see that end of day ramp with the divergence play that we usually catch. It's just like uh, just closing the books, right? Just like rehedging or closing positions, and then we get our continuation after that. Nice little run up, usually. You just don't want to be caught on the wrong side of something like that. Oh, great job, Acidic. Did you guys win on that FSLR play? I was a little doubtful on that one. I was like actually gambling. Until music bot is fixed. Yeah, we'll do that because I'm going to do the review of our first trade we took today. So that'll be covered in that again. Roblox. Holy shit. It's a name I haven't heard in a minute. I'll show two examples of it happening. I might actually add them because there was a really good um, example in Globex yesterday as well. How much time do we have left? 5 minutes. Nice divergence setting up here on tick with the higher lows developing and zero hold into our halfway back. Something worth watching if we do see any sort of real bid step in into this 39.54, 55 area. If zero can hold, this might be not bad. Failure so far. Let's see if it wicks back up. Basically just looking at this box, which is our previous 15-minute halfway back of the candle, right? And then I'm seeing these higher lows. So I'm just waiting to see if we get a push into the low. Usually you get like a divergence signal, and then we see a little bit more of a dip, and then we can get a push up if we see follow through. So I'm in just small here. I'm just going to set at break even, either it works or not. I'm in at 11,955. We're seeing NQ lead, but that 60 is still going to be rough. Nice divergence into close, though. There it is. Again, I only have one contract for the end of day divergence play. I don't know if we get much more follow through than this, but I'll post my average in chat. But nice little push there. I chose NQ over ES just because I can capture more points, and I saw the strength in ES there. So I figured NQ would give a little bit of a follow up, the divergence. I moved my stop up above break even, right? Just so if we can capture, so it'll be like a $50 trade regardless if this doesn't work. But I think that there's potential. The size very small. It's end of day. You've got 2 minutes left, maybe not even that. Do you guys see this divergence that I was looking at? You had to be very quick to get in, but I tried to call it as fast as I took it with this and this into our halfway back, right? We have a known pivot in that range that we previously tested, so we haven't gotten the biggest follow through. But do you see why I chose NQ over ES? Because of where it was holding. It's much better price action wise. So a 60 pivot still giving us trouble on NQ. But we do have it is leading up. I like that. Captured 40 ticks so far, 50 ticks, 60 ticks. Moving stops. Nice. Okay, I'm out. Nice little play there. We'll end a day scalp. Okay. So let's cover what we took today. I wrote out most of them, so it should be pretty easy going over this. Okay. I think the best way to do this is probably to have T2G. So let me pull up a Discord feed just so that I can run down our thought process. Give me 1 second. Gotta load it. Okay. Let me get situated here. Hide servers. Okay. Scroll back up to beginning of day. Can I minimize this at all? Nope. Take it like this. Okay. So started trading around 10:14. So we were looking for a buyer into the 39.50, 39.52 area with confirmation over 39.55. So this was that 50, 52 area that we were looking at. The reason we were looking at this is the most important part. It was our first test of these lows. So if we go to, probably not a daily, let's go to like a 15-minute chart. This was the bottom of the balanced range that we were trading in. And this was our best opportunity to try to capture a double bottom into this like 52 with a new low and then that immediately coming back up for a rebid. So I was looking for a bounce there because it was the bottom of our distribution on on a time-based profile. And we can see that here. So this is what we were looking for. It was worth trying to take this trade because we knew that this was the bottom of our distribution and it was our first time coming into this area. So this like 50s area was worth trying for a rebid for a push back up. It was a first attempt in here, so trying this made sense. This was also Apple ADR and I believe VIXI ADR as well as a resistance, if I'm correct. So we were looking for this potential bounce into the lows. Where are buyers going to try to find value? They're going to, for higher time frame traders, they're trying to accumulate at the lows, right? So like we're looking for participation down here for a pushback up. If we expect that the day is a double distribution, we're expecting that this range is going to hold, right? And we're going to be building in this area. So targeting these lows and then pushing into the 71, 75 area made sense because this is the bottom of the distribution that's here. And our TPO is right here. And this is the bottom, our value area low from the previous day, previous session. And this is where our, here, I don't need to draw this out again. I've already done all the work. This is where we were looking because this is that void, right? This is where we expect resistance to be. This is our value high from the bottom distribution that was created, and it was the value high from the previous distribution that we're trading, right? If we're buying the low of this previous distribution here, we're going to be trying to sell into the high of it. That only makes sense. So we know this is resistance. We can see it here, value low, value high, value high. This is our value high here. So this is an area that's highly contested. The 70-75 area made a really good PT for where we needed price to push. So we could get these lows, grab it, and then try to hold into here. Does that make sense, guys? Yes, yes. So the risk is low trying to, like, we know if this isn't going to invalidate, we're no longer in a balance, right? We're no longer just doing these V recoveries where we're just holding this range. But it's worth trying these lows in case that happens, and we can keep a very tight stop because we know where this invalidates. So trying here makes sense. And a push over 55 got us back into value for that distribution, right? Do we see that? 55. Look where the darker blue is. Do we see? So we're looking for that to hold for a continuation up. So 55 was my first target, and that that was that area where I took off my first initial buy from the lows. And then we were looking at here we can go into this now. So we took off into this 55 area, our orange cloud. It was the previous range, right? So we take off some risk into this just in case we can't break back over. We see that a higher low forms, and then we look for continuation. You can either try to buy this higher low if your average is down here, because we set our contracts to break even. The trade was either this is the bottom, right? So I'm willing to set my runners to break even because either this invalidates and we didn't catch the bottom of the day, or I can try to add to my average at the best next price, right? With the same stop as our entry. Because the trade is still valid. We're just looking for a higher low to form for continuation up. Does that make sense? So I risked off some. Another opportunity was given to average into that position, and we push up into our known resistance. So if we go back to the our profiles, remember this was that area that we were looking at as our main resistance. This is where those value highs were in that distribution. So we took profit into this area, and the next trade that we did was, hey, like either we break and hold this 72, 75 area, right? We build this out as support, or this is our best shorting opportunity. Let me pull up. There we go. I have them on my Trade of 8 layout. So like on my Trade of 8, I have the 30-minute TPO chart. I then have my 1 minute for ES, and then I have a 15-minute, and then I have an NQ 15-minute. So my charts are, I have 4 charts on Trade of 8 with my DOM. So again, we were looking for these areas. We're in runners from the absolute low, and now we're looking for those highs. So we're selling into those 72 area. We can keep going. Okay, so now we posted this. We have now captured 2 20-point moves. We've captured both of these. We're going to cover this secondary trade now because this was known. We had a clear resistance above, sellers there. We sell into that. You either have an opportunity to short here for the move back down. And the idea behind this trade is that we're going to, this is our bid. Oh my God, I can't stand that. This is our bid. This is our move up into a supply. This is now a stop. We're looking for a basically like a push below our low to trigger stops, right? So this is a stop hunt. And now we're looking for a rebid up. So I'm watching our flows, our order flow come in, and I'm looking to see if we have participation into this level. If we see that we have buying pressure and we have a acceleration out of this area, I want to partake because I understand that this is going to stop out all of the shorts who are now stuck in these lows, right? We've punished the buyers that are here. We're now going to punish the sellers that are here. They're trapped. So we're going to be pushing up. So this is the same setup that was in Globex, where we have a bid, we have a stop hunt, and then we have a rebid. And we cover this in I don't know if I covered this that much in T2G, if it was in the other chat. So we're looking for 40-42s over 52, and then we push into 58s. So we were looking for the low 40s for a bid, push up. We trimmed into, oh my God, I hate that. We trimmed up into our first target and the middle of this range where the seller was before, right? We have an imbalance that's here that needs to be filled. Do you guys see that imbalance? From the sell off, right? So we have an imbalance here that needs to be filled, right? So we're looking to trim here because we don't know that if this is going to sell and continue down, or if it's going to eat up the seller that's here and chop before we get our move up. So what we're looking for is for this area, for all of the sellers that want to get filled here, we want to fill them, and we want buyers to eat up all of that, right? And then we want to see a push up and a hold of this area, what was resistance, right, become support for that continuation up into our known resistance level. And remember, this resistance is the upper distribution of our B profile, right? This is that area right here. So this is that bottom distribution of the B, but the upper distribution of our bigger sorry, I said that so poorly. This is basically on our profile. This is the area in between the high of our distribution that we're currently trading in and the resistance or the supply before the higher distribution on our double distribution profile. Does that make sense? Yeah, look left. Yeah, exactly. Right, so that's why we were targeting this area. I thought that we were going to chop here for quite some time. I thought it was going to be a balanced day just based off like how we were trading. What we were looking for then is this major resistance area, 39.70, 72, 75. The only thing that we're looking for is where do shorts find value and where are buyers from the lows going to be selling. If we know that, we know if we should be trying to long there or if we should be trying to short there. In an area where we expect heavy selling, we expect chop, right? And we either want the buyers to absorb that sell and we chop sideways and we form a flag, right? Or we expect sellers to push if they have more ammo, right? Which they did here. Sellers keep offloading, keep offloading, keep offloading, and we know that this is our resistance, so it's the best opportunity we have to take a short in this area. We know it invalidates if we get over our 75, but it's the best area to try to take a short because it is a known supply level. So that's what I say. I say if you're in long runners, move your stops up. And if you're not in position, the only thing here is shorts, right? That's it. Are you going to try to long the high? No. You're either in from the bottom, you're in from the bounce, right? Or we wait. 75s have to become support. So your only opportunity is either you wait or you try to short it. So we're in from 72s here on our short, which is right here, right? So we just hold this. It makes, I think on we just kind of curl over and we're making lower highs with each attempt, right? And we're seeing large sell wicks at these highs. Sellers still present, and we're looking for a continuation down. Is everyone with me? Do we have any questions so far? I did cover this as we were going as well, but I'm just trying to give us like an overview at the end of day. So like you can see that the initial plan from the morning never changed, right? We knew from the get-go.
So taking a look at the market wrap for today's session, the US stock dropped for a second session as investors revisited their wages on peak rates after economic data highlighted persistent inflationary pressure, and the Federal Reserve officials continued to sound hawkish. The S&P 500 closed the day at its lowest level in nearly 6 weeks. The Nasdaq 100 dropped to its lowest since January 30th. Both indexes remained lower for most of the session after a gauge of manufacturing improved for the first time in 6 months, and investors balked at prices paid measures also rising. Treasury yield stayed higher, with the 10-year rate piercing the closely watched 4% level. And Fed swaps are now pricing in a peak policy rate of 5.5% in September, with some traders betting that the benchmark interest rate could reach 6%. A dollar index, the most since February 1st.
Question: typically entry size or just stop size? Thank you. I try not to trade. I trade in 2 lots usually. I buy in either singles or I buy in doubles and I pyramid in. And then I try to take off profit half profit into first target and leave my last runner at break even if I think trade's going to continue.
So investors remained cautious today after Fed
I
officials
only short
reinforced their
with
hawkish
micros.
stance today.
I
Alanta's
long with
Fed's boss
minis.
called for continued rate hikes to above
And I only
5%
short
to
at
make sure
known
inflation
larger
doesn't
time
pick up
frame
again.
pivots. And then I just play
Minneapolis Fed
reversals
Kashkari, meanwhile, said
with
he's
with
concerned that
minis.
there isn't much
The
of an
leverage.
indication that these central banks' rate hikes are slowing down the services sector.
Okay, so we're in our short. We're in 72s. We have our runner still from the lows, and I've entered an MNQ, a micro short, in the highs, because if this is going to hold, I want to have some position. Why change for micros for short? Because I still have a bullish bias, but I want to hedge my long from the lows. So I still want to be able to participate if this is the high of day, right? But I want to still, I don't want to exit my runner. You get me? So I expect chop up here because there's a seller. So the worst that happens is that I stop out for a smaller loss, right? If we break to the upside, but I still have my runner from the lows. But I've entered a speculative hedge thinking that this is probably supply. So I want to make sure that I have my stop on my runner so that we can keep going and I can be in this move with the best possible average. But I want to enter a small micro position with shorts, understanding that this is most likely our like higher time frame pivot for the day. So I've entered smaller to hedge my long, and this stops out, and I'm already in a micro short from the highs. You get me? It's hard for this trade to fail because I'm in a runner from the low. So I can cut this for $50, right? Because I'm trading micros and it's very small. And I'm still in with like 300 ticks up, 20 points up on the trade. So like it just makes sense to try to. It's like if you're trading options, you can be in naked longs from the lows, but once we get to an area where we're chopping and we're not sure on direction, you can take a put debit spread, right? Where it's either we're chopping up in this area and we expect price to not really move and we can get the theta burn, and we can protect that position from decay while also hedging our long, right? So that's what we're looking for. So you can put on spreads at these lows without having to put on as much ammo into them while still making money. So you can start to hedge at major levels. So that's what we did, or some of us, that was the idea. And then I just took profit at our pivots, right? So we bounce into our previous range that we were holding here. And the idea was that we had this imbalance that was created and we were expecting buyers in this area. So the idea was we could trade back down into like this 55s and then 52s. That was the idea. You can see targets below are 57, 55. So this was our first imbalance fill. So 57s was the mid of this imbalance, and 55s was the low of this imbalance. And this is where I took off most of my short into the lows because I was expecting a bounce back up. Right, but that's it. I mean, like that's the short. We see that there is a known seller here. We're hitting our head on it. I'm gonna take a small hedge, and I'm gonna be able to add to this position. I think most of you guys got in here at the 64 retest. The 64 retest was a great entry for you guys. It was our regular trading hour opening range mid on the 32nd. 39.64 was the mid. So what we did is we broke back over our opening range low. We traded to the opening range mid, we rejected, and we saw continuation down. That's where most of you guys got into this trade, which was great. Great entries. And then we got our continuation, and then we were just out for basically the rest of it, right? We were just waiting to see how this played out. And then it was chopped because we were looking for either this low to hold or a new low of day, right? And we're in a runners, and we're happy because we caught everything that we needed to. And then it's just waiting for a divergence to start to form and then continuation back up. What else did we say? That was basically it. Those are like the three main trades, all 20 points each at least. And then we just had some nice little scalps at the end of day. but nothing changed from the original plan that we put into chat from the morning, which is we have we're going to either try to take the bottom of this distribution, right? And then we're going to be trading here, building out this D. If we're able to hold 72.75, right, that area where we expect supply, then we can trade and test this upper distribution. But we expect just balance in between. Every play that I took was based off of that thesis. Any more questions? We good? Here's my end of day trade of 8 performance. Boom. Did you guys find that helpful? Should we do that more often? Oh, someone had asked about the rebid thing. So we actually saw, let me cover that because we saw the same thing last night, the same setup, which is, let me go to this same move that we were looking for at these lows, this bid, stop, run, rebid, happened in after hours too. Bid, stop, run, rebid, right? Where we tried for the highs, we stop out these idiots here in Globex, we push to our low, which was, if you look, this is where we're expecting buyers to step in again. This is from the last big run we had. So if we're looking at on an overnight, we were looking for buyers to try to hold this area, right? So they dip their toes back in these lows. So you have a stop run from everyone who bought this bear flag here from the big vomit sell-off. So this is your bid, and then you have your stop hunt, and then what we're looking for here is from that stop hunt, we have our squeeze, force buying, force market buying, a push, right? And then we're looking for passive pushing, passive buying, real buyers to step in for continuation up. So you have your bid, stop hunt, rebid. And that locked out, that fucked over these guys, and then we can run, right? And then we just come back up and we trade right to the imbalance that was created here, where we had that vomit down with the poor structure. There was confluence with the 64 short and the opening range. So like, again, I used the 30-second opening range for Globex regular trading hour session and the London opening OR, these three, as a bias, right? So if we're trading halfway through the day back at where we started trading in the first 30 seconds of the session and we don't have strength there, it's a pretty good sign that we're gonna reject and go lower, right? Like if we're trading in the opening range for the first 5 minutes, 15 minutes, 30 minutes, hour of the day, it's a pretty good sentiment check that we are not trending up, you know? So the opening range here, like I can actually show this on everything about what we do on the 15-minute opening range still applied, right? What happened when we recovered the opening range low? We traded to the opening range mid, right? After we lost the opening range, we then recovered it. We traded the opening range mid. That's an opening range play that is in our playbook. We then reject, and then we go for the lower, right? So even if you didn't get in here, this is a 15-minute opening range play that we've taught before, right? You reject the mid. This is your first PT from the recovery of opening range low, and then we look for it to retest for continuation down. The same thing applies, right? And the reason why the 30-second is because on in like the olden days, right, when everyone was trading in a pit, they used to print out opening ranges, and they still do. And it's your 30-second, and it's your hourly, right? Your hourly is your initial balance, is what it's called. The range that we're trading in. The 30-second was from pit traders back then. But like these things still have meaning and like have value. So yeah, those are the trades we took today. I think we had some really solid ones. I mean, being able to capture 4 20-point moves is pretty nuts. Especially on a day where we literally did not move. Like, we did nothing. And we have been doing nothing. It's just balance. With London session getting the best entries. And then it's just balance in our session. But I need to go walk my dog. She's crying. I'll be around in chat tomorrow, probably T2G mostly. But that's it. And then Friday we stream. Okay? Jesus, or Jesus, I don't know how to say your name. Did I answer your question? I don't know. Where do you see order flow when MM's trying to take out the liquidity? I mean, it's just understanding of where the previous range was, and then knowing where like max pain is going to be, quote unquote max pain. And then looking at our previous ranges that we've traded in, where liquidity was before, and trading to those areas, and then trying to find participation. We know that participants are there if we see an acceleration out of those areas. What does acceleration look like? Well, it looks like this, right? We one time frame into the area and we're one time framing out. We're pushing out immediately, right? We're seeing a clear sign of buying, right? And we're holding that. And anyone who was short at those lows, when we accelerate out, is going to be in a lot of hurt. Again, I'll do live on Friday for Twitch and for Discord, but I'll be in Discord only for tomorrow. You guys have a good night.